Welcome to ISE's Equity Index Weekly Outlook, a weekly outlook on ISE and other industry indexes, hosted by Patrick Ceresna, a derivative market specialist and investment manager with extensive expertise in options and the broader derivative markets. ISE trades options on more than 15 proprietary sector indexes, as well as broad-based indexes and a variety of licensed benchmarks. ISE continually enhances its trading systems and develops new index options products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to the ISE Equity Index Outlook for November 22nd, 2010. This is Patrick Ceresna. As always, to start off with a chart of that S&P 500 using that spider exchange rate fund symbol SPY. We were talking about how a critical break below 119 would open the window for a deeper consolidation on the downside last week, and more or less we got a break over 119 on one immediate sell-off. And subsequently almost immediately reversed, creating this flagging formation. So the selling was never built upon on the downside. Now that is pretty significant. We're still not out of the woods yet. Theoretically, this could be a zigzag formation, which would fail somewhere around this exact 1220, 1221 area, and then do another full leg lower toward 116 on the downside. But if the bulls at this stage, after a good 5-day sell-off like this, were able to actually break the market to a new high, that would actually open the window for another significant leg of a rally, and this entire pullback now qualifies as a deep enough of a correction for something like this to actually happen. So this week, what we're going to be watching for right off the bat is whether or not the bulls can follow through on the last couple of days of positive price action. If they can get this market back up to that 122, 123 area on the upside, we know that the market is positioned to make another push as high as the 126 area, and then subsequently even into January of next year, even as high as the 130 area on the upside. But again, that would be on the assumption that it beats the 122 level. Next here, I want to take a look at the ISE US Regional Banks Index, which is symbol JLO. And you'll see when I put this chart up and the chart on the home builders, both of them teased us with a potential breakout attempt above a key level and then subsequently failed. That's important information. It just means that at this juncture, the amount of people trying to distribute these stocks into strength is still formidable, and that means that range-bound price action is far more likely here. The only circumstance which I would imagine that the regional banks and when I talk about the home builders in a second, that we would see much lower markets would be if the whole market began a much bigger market correction. But if the S&P continues to hold in around these levels and roll up, then we should still see the bottom end of the range here hold on regional banks. Next here, I want to take a look at the ISE Sindex. This is symbol SIN. This is an index of all the casino, tobacco, and distiller companies. And more or less, we had a very robust rally that reversed off that 30-32 area, creating this little flagging formation. The sell-off itself never went as deep as that 121 to 123 area where the highs of May and April came in. But this in itself qualifies as a perfect retracement. So if the flag on the upside breaks, especially if it's confirmed by an S&P breakout on the upside, then the Sindex is still in a position to rally to new highs. Next year, when we take a look at that ISE Home Builders Index, which is symbol RUF, we had this little bullish breakout above the 950 level, and it looked like the home builders were ready for some good positive price action, and almost immediately started weakening after that breakout, especially on D.R. Horton's earnings announcements that sort of reversed it. Now that we've come all the way back down to where the lows were, where that breakout occurred, that immediately mitigated any effect that upside breakout had. At this stage, we're back into the middle of the trade range-bound market between those two red zones, and at this stage, we certainly cannot rule out the possibility of testing on the lower end of that zone. Next here, I want to take a look at the ISE Natural Gas Index, which is symbol FUM, and more or less, we had a rally on the upside that tested what we now adjusted to the 114, 116 area where the highs in April came in. Really, we had back in October, we had this little flagging formation that finished a measured move up to that high. But here we go again with another flag. And now that natural gas as a commodity is actually improving, there could continue to be new money flowing into these natural gas stocks, creating new waves of buying. It'll be very interesting to see whether the bulls can follow through and follow up on the bullish price action we've seen in the last couple trading sessions. Any break above the 114 level to a higher high would certainly open the window for a move even as high as the 120 area on the upside. Next here, I want to take a look at the ISE Mini FTSE 100 Index, which is a symbol UKX. Here we had that 585.90 zone continue to reject. We slightly adjusted it higher up there, but it really the market, the FTSE continues to consolidate sort of sideways. And again, if the whole global market led by the S&P all bullishly break out, then the FTSE could certainly make a new push to higher highs. Now we have marked off the 630 to 640 zone, which is actually a major overhead target on the big picture. But if we had a bullish break, we would be expecting the move to stall somewhere in the 600 to 620 area on the first push attempt higher, and only in the big picture targets would be going as high as the 630, 640 area. That was the ISE Equity Index Outlook. Thank you for joining me.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free index options trade alerts, visit www.optionsource.net. To learn more about ISE index options, visit us at www.ise.com/indexoptions.